Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we'll look at the bank statement and the reconciliation process. The objective is to ensure that transactions and the balance on the bank account agrees with those on the bank statement. So we have two records. Now, this bank account is in the general ledger of the business. This bank statement comes from the bank. And apparently, the information on the two should be the same. And indeed, it turns out to be the same. The only difference arises from what we call timing differences. A transaction may be recorded like a bank deposit. Once we present it to the bank, we debit the bank account, whereas it will only appear on the statement after it has been cleared. So there is a timing difference that will cause the difference. Okay, now this reconciliation process is done for the bank account and is also done for the credit card plus the loans and hire purchase accounts. Procedure is the same in that we get an external credit card statement, we get a loan statement from the bank, and we also get a statement from the hire purchase company. So the procedure of reconciliation is the same. And then below here, we also have creditors and debtors reconciliation. Now, creditors reconciliation was looked at briefly in session 19. And then, of course, there is cash reconciliation. Now, cash reconciliation is the simplest of all, in that we simply look at the balance on the cash account and confirm if it agrees with the physical cash in the cash box. Simple as that. Now, with the reconciliation process, we need to look at the bank statement and the bank account, or the reconciliation form in the software. So let's go to the bank statement. This is going to be our bank statement. It is on Excel. And on the right here, we're going to have the bank account. Now let's see how we access this reconciliation report. Okay, now this reconciliation form or report, we can access via two options, either among period reports and then monthly reconciliation, or let's go back. We click on module 2. We click on periodic tasks and reports, and then scroll down to P3, bank statements. Yeah. So that brings us to this reconciliation form. However, we need to select the account and the month. Now, the account we are reconciling is account bank 1, which is account 205. And we are not reconciling month 1, we are reconciling month 12. That is where the transactions are. Now let's pinch this. Let's pinch this. Now the blue boxes really need figures to be typed in. So on the left hand side, we type in the opening balance, which we copy from that statement. Ideally, we want to confirm if the entries in the software and the balance do agree with the entries on the bank statement. If they don't agree, we should probably explain why. Now, we do mention at some point somewhere that we should avoid recording check stubs and deposit slips. Why? Because they will definitely create a difference among the two balances. So to avoid this unnecessary difference, we should instead record transactions coming from the bank statement. That means that we have to wait for the bank statement. In other words, yeah, because bank statements, well, with internet-based accounts, you can get the bank statement instantly, anytime, You can check on the account all the time on a day-by-day basis. But if you're waiting for the month end, then reconciling bank transactions can only be done after the month end. But with technology, you can check each and every day. So we should avoid these and instead extract transactions from the bank statement itself. Now let's see. Now we're going to start with the opening balance, which is 136. So we copy that one from there. We type in 136. Okay. Now we obviously have a difference of 136. Now that difference there, that difference is coming from that, and nothing is ticked as yet below here. Now if you can observe clearly, we've got tick boxes on the right there. Whatever is ticked is added. Okay, so now what we have here is the closing balance. We can copy the closing balance 3465.5. Type in the closing balance 3465.5. Okay, now the reconciliation process comes to an end after we have a zero balance, and the red color should disappear. Now we're going to discover that some transactions do appear on the statement but don't appear on the bank account. So the bank account needs to be updated. So we're going to start with the first transaction up there of 400. Now before we do any ticking, we must have found its match. If there is no match, we don't tick. So 400 against that 400 there. And as we tick this one, that difference is going to change. So we click the tick there, and the difference has fallen from 3,300 to 2,900. Now this is Excel, and the best we can get here. Let's see, the best we can get here. Okay, let's drag it up there. Okay, so we have ticked on our Excel. That's the best we can do at the moment. Now the next one is 15,180, 15,180. So we tick here, and the balance is now negative. So we're going to copy this tick below them to confirm that the two have been confirmed. Then we have 12,000 there against that 12,000. So we're going to copy the tick onto there. The difference is being narrowed. Then we have 100 there. Does it have a match? No. 75, no match. 250, no match. What about below here? We've got 40 there, cash withdraw. Yes, it matches with that one. So we're going to copy our tick from up there and paste it there. All right, now bank charges. We don't have a match. What about this 28? We've got a match for 28. That one there. Okay, and let's mark it. Let's tick below here. All right, so that is the first phase, identification of matching records. Now the next phase is instant correction. However, let me mention that if an error is discovered, you click the underlined transaction number, which takes us to the recording form, and we can make a correction. Let's double click that onto this 40 there. Okay, now that this is the original recording form, let's tilt it round, let's rotate, and there we are. This is the original recording form. In case any change needs to be done, for example, the date, let's change the date to the 31st. Click that. Okay, and then set. Has it registered? Yes, 31st, yeah, and then we update that. It has updated. Now when it updates, we've got to select the bank account again, and then the month, which is 12. The month, which is 12. Now looking at it in this Okay, we need the to rotate it first of all. Okay, now it's not going to show all. Okay, now we can observe that everything here has got a match onto the bank statement, but some transactions on the bank statement don't yet appear in the software. So we have the next step is actually updating the software. Now, extracting transactions from the bank statement makes the reconciliation process easier. If we extract transactions from the deposit slip and check stubs, the process gets a little bit longer and we shall definitely have a difference that needs to be reconciled. But in this case, fingers crossed, there should be no difference. So now we need to record that loan repayment. All right, okay. Now let's go back to loan repayment. We have to use the miscellaneous, the 2-entry form. So that is a 2-entry form and the date is the 30th. All right, let's rotate this one to see a little bit more. We are recording that 100 on the 30th of March. The date is there. Now, where is it coming from? It came from the bank paying the loan. Now let's have a quick look at these entries on the bank account and the bank statement. All right. Now the bank statement credit column. Let's have the statement. Let's try to share this screen. And we drag this to the left. Let's try to squeeze in the space that we have. Okay, anyway, we have the debit and credit columns. Now the bank statement credit column. Transactions updated on the bank account include direct credits, electronic receipts, loan advance, and bank interest. Now we're looking at the debit column. We're looking at the debit column. Now let's see. Now this one is a loan repayment. So I beg your pardon. Oh, I'm mixing it up. Okay, let's start with the lower section, which looks at the credit column. Now this credit column using the T account would match with the debit side of the bank account in the general ledger. But then in this case, we have all transactions in a single column. So we're looking at red and black. Now I think we're going to do that just from owner. This is the bank statement. Now let's try to paint this red. We hope we get it right. Now let's get to the device quickly. And we're going to access the bank account. We need to rotate this. We need to access the bank account, miscellaneous. We are there. Periodic tasks and reports. And then we scroll down. We're looking for report P5. That's report P5. And we're looking at month 12. Should we look at month 12? Month 12 will not show the opening balance. Okay, then in that case, we're going to look at report L. I think it's L3. L3. We need to get out of here. Okay. Need to go drag this down. I'm going to report L. I think it's L3. We're going to the year-end reports. We're going to year-end reports. And we're looking at bank reports. And we're looking at the bank one ledger account. That's L4. Sorry, I beg your pardon. Now we need to pinch this L4. Okay. Now we've made a mistake here. We did not adjust. The opening balance is supposed to be 4445. Beg your pardon. That's supposed to be the opening balance. Yes, and we shall adjust that. Okay, we forgot to adjust that in these demo records. Okay, Now we are saying that all transactions which are ticked do appear on there. Yes, with the exception of the opening. Oh, the opening balance is there as well. Okay, so we've got the 400, the 15, 180. Now what we are saying is that on the bank account, what is in black actually are debit entries. These increase the balance on the bank account. And as far as the bank is concerned, these ones increase the customer's account as well. They increase the customer's balance as well. Now, these 12,000 and so on, these are payments. These reduce the balance, and these entries also reduce the customer's balance. Yeah, so now we are saying that on the bank statement, transactions in the credit column that are updated include standing orders. Now, this is supposed to be interest. Interest. Credit column. I'm mixing up the two. So this is the credit column, this one here. So that is where the interest is, the £2.50, which is going to be updated. And then the other items we need to update should be direct credits, electronic receipts, and the loan advance. Now, from this column here, we are going to update these ones in yellow. Those three items. And those three items should be either a standing order, a direct debit, a bank charge. This £10 is a bank charge. Then that 75 is credit card repayment. Okay, and then the 100 is a loan repayment. So that is what we're going to update on the bank account as transactions. Let's try to speed up. We're running out of time. Good. All right, we go to the double entry form, two entry form. Now we're going to record the 100, that 100, the date is there. Now here we're looking for the loan account. That loan account I think is 225 is going to be debited. 225, that's the loan account. And the one to be credited is bank. That is bank 1. And the amount in question is 100. The amount in question is 100, and the narration is loan repaid. Okay, that's a loan repaid, and then we save and next. Okay, now we're going to record this interest of £2.50. Okay, that's a bank oh wait, we didn't save. Click save. Oh, fill in the document number. God, that's document number 8. It can't save without a document number. That's 8. All right, we save and next. Okay. Now, because we're running out of time, I had to record the transactions quickly. So we're reconciling that one, and then that's month 12. So the unticked transactions, I've done the recording. Let's pinch and confirm if I've done it correctly, because when an error is made, this is the opportunity to correct the error. Now that 75 is right, and then we've got where is the 100? I think the 100 is not recorded. Okay, that 10 is all right. The 10 is there. The 250 is all right. And we still have a 100. Now just let's, oh god, this is outside. Okay, now let's copy this up here. So all those transactions are correct apart from one. I'm going to record that one very quickly because it's causing that difference of 100. Okay, I have just quickly recorded the outstanding 100, and now we can confirm that the 100 appears there and is there as well. Now the question is, do the balances agree? No, they don't. Now we didn't correct this opening balance. It should be 445. Okay. I have just corrected the opening balance because we're running out of time. So that opening balance agrees with that, and the closing balance agrees with that. And since all of them are ticked, there is a 0 difference. And that brings us to the end of